So, have you been watching the markets lately? It's been a bit of a roller coaster, hasn't it?
Yeah, it has. Definitely a lot of ups and downs.
I bet for anyone just starting to think about investing, all this volatility can feel a bit overwhelming.
Absolutely. It's understandable to feel a little lost when the market's doing loop-de-loops. Where do you even begin, right?
It's exactly why we're doing this deep dive today.
Hmm.
You shared those really cool YouTube videos with me from the Risks X Rewards channel. We've been going through them, and our focus is on pulling out the gold nuggets, the key insights that are especially helpful for beginners in investing and trading.
And what's great about these videos, I think, is the mix. I mean, it's not just some dry textbook stuff. You get a feel for the bigger market picture, but then you also see the person actually making trades. You even get glimpses of their own journey, how they got into investing. It's a pretty cool mix of perspectives.
Yeah, it really is. And our goal here is simple: to give you a clear, actionable understanding of some of the core ideas from these videos, along with some of the speakers' observations about the market right now. We want to equip you with knowledge, but without overloading you.
Right. No information overload.
So one of the things that struck me early on was the way the speaker talked about learning, like how learning itself connects to getting started with investing.
What I found fascinating is the emphasis on the fact that learning anything new, especially something like investing, it takes time. You have to be exposed to it consistently.
Yeah.
And the speaker had this great point. Even if you feel like you're not fully grasping everything right away, like it's not sinking in, your brain is still processing it in the background.
Yeah. Like when you first start learning a new language, everything just sounds like gibberish. But slowly you start to pick out words, phrases, and eventually you can speak.
Exactly. It's like your brain's working on it behind the scenes. And that's kind of comforting if you're new to this whole investing thing and feeling a bit overwhelmed. Just being exposed to the information is a good first step.
That's a good point. It makes you feel like you're already making progress, even if you aren't actively trying.
Yeah, and if we zoom out a little bit, both learning and investing are long-term games. You're not going to become a market wizard overnight, just like you wouldn't expect to run a marathon after one jog around the block.
That's a good analogy.
It's all about consistent effort, staying engaged. That's what builds understanding and ideally helps you grow your money over time.
Makes sense. So let's switch gears a bit and talk about how the speaker sees the market right now. Because they talk about all the volatility, the ups and downs we've been seeing, but they don't see it as the end of the world. They view it more like a pause in what they believe is a bull market that's still going strong.
Mm-hmm.
What did you think about that perspective?
It's definitely a glass half full way of looking at it. The speaker's very optimistic. The way they see it, this volatility is temporary. And one of their main arguments is the potential for growth driven by all the investments happening in artificial intelligence.
Yeah, the AI boom. It's everywhere.
Right. AI has been a buzzword for years, but we're finally seeing companies putting serious money into it.
Like real capital being deployed.
Yeah, and the speaker believes the real impact on the economy, on the markets, it's still to come. So the expectation is that AI will open up all these new avenues for growth.
Exciting time.
Definitely. But it's important to remember this is just one interpretation of the current market situation. The speaker also points to global factors, geopolitical things that are causing uncertainty, the ongoing threat of terrorism, the war in Ukraine, and China's economy not recovering as quickly as some expected.
Right, a lot of uncertainty in the world.
Yeah, and the speaker's view is that once some of these things settle down, the market is poised to climb higher again.
And this leads to the recommendation to get in now, or at least position yourself for potential future growth. But I want to emphasize, this is just the speaker's personal opinion shared in the videos. It's not financial advice from us.
Absolutely. We're just relaying what the speaker said.
Yeah, just sharing information. It's important to do your own research and talk to a financial advisor who understands your personal situation, your risk tolerance, your goals, all of that before making any investment decisions.
100%. Financial advice is best left to the professionals.
Okay, let's move on to some of the practical steps for beginners that the speaker mentioned. They talked about platforms like Robinhood and even briefly touched on TD Ameritrade.
Robinhood especially has made investing much more accessible for people. A lot of people like its simple interface, it's user-friendly. It doesn't feel like you need a finance degree to use it.
Yeah, very intuitive, not intimidating for beginners.
Right. And they mentioned you might even get some free stock when you sign up using a referral link. It's not much, but hey, it's a nice little bonus.
A little incentive to get started. So besides the platform, what about actually starting to invest? I mean, do you need a ton of money to get going?
The speaker emphasized that you absolutely do not need to be wealthy to begin investing. They suggest setting aside small amounts regularly, even if it's just a little bit each week or month.
That's manageable for most people.
Right. And it's actually a really effective strategy, especially when the market's down. It's called dollar cost averaging.
Dollar cost averaging, okay.
Yeah, you basically invest a fixed amount at set intervals, regardless of the price. This way, your average purchase price evens out over time, and you reduce the risk of buying a lot right before a big drop.
Interesting. So you're not trying to time the market, you're just consistently investing a little bit over time.
Exactly. It's a more disciplined approach.
And the speaker even threw out some specific examples of stocks they thought looked promising at the time they made the videos. Companies like Walmart, Amazon, Meta.
Right. These were well-established companies that the speaker thought were trading at good prices, offering good value. It's interesting that these companies represent different parts of the economy, too. Consumer staples with Walmart, e-commerce with Amazon, and tech with Meta. So it's a bit of built-in diversification.
Right.
And the speaker specifically pointed out that Walmart could be a good choice during times of economic uncertainty or recession because it tends to be more stable.
Okay, that makes sense. Ford was another one they mentioned, I think partly because it was trading at a lower price per share.
Yeah. Of course, it's crucial to remember that these were just the speaker's opinions at a specific moment in time. The market changes fast.
Definitely. Things can change overnight. So the videos also delved into the difference between trading and investing. What's the main thing beginners should understand about that distinction?
Well, the biggest difference is the time horizon, how often you buy and sell. Investing is more of a long-term game. You buy assets like stocks and hold them for months, years, even decades. You're aiming for growth over time.
Right, the long game.
Yeah. Trading, on the other hand, is much faster. You're making more frequent transactions, often trying to capitalize on short-term price swings.
So it's more about timing the market, catching those little waves.
Yeah, exactly. And it's cool that the speaker's videos touch on both approaches, both investing and trading, so you get a taste of both worlds.
Nice. Speaking of trading, the videos also had some actual trading updates, the speaker walking through some trades they made. And they talked about patterns they look for in the market.
Yeah, it's like getting a peek behind the curtain, seeing how a trader thinks. They talked about buying Meta around $595 and then selling it at $616. They did a similar thing with Ford.
And if I remember correctly, the main reasons for selling both were concerns about volatility and some news about tariffs that came out.
Yeah, those were the main drivers. And it's funny because they sort of admitted they might have sold Meta too early.
Because it kept going up after they sold.
Yeah, which just goes to show you can't always predict the market perfectly. Nobody can.
You really can't.
But then they also talked about getting back into Walmart, observing that the stock dipped after initially opening strong that day.
Which illustrates an important point. Even when there's good news or a stock starts the day strong, it can still pull back.
Exactly. And the speaker's approach was to wait for that dip and then try to get a better price, even for a company they seem to like in the long run.
It's like they're saying, be patient, wait for the right opportunity.
Right. No need to jump in at the first sign of movement. And then there's the whole thing about market catalysts. The speaker suggested using resources like ChatGPT to stay informed about these.
What are market catalysts exactly?
They're basically events or news that can cause big price movements in a stock or even the whole market.
Got it. So it could be a company announcing its earnings, some economic data being released, a big geopolitical event, anything like that.
Exactly. And knowing about upcoming catalysts can help you anticipate potential price swings and make better decisions about when to buy or sell. For example, if you know a company's about to announce a game-changing new product, that could be a positive catalyst that drives the stock price up.
It's about being informed and trying to anticipate what's going to happen.
Exactly.
So even if you're a long-term investor, waiting for those pullbacks to get a better price seems like a good strategy.
Absolutely. It's about optimizing your entry point.
Right. And the speaker also touched on the idea of tweaking your automated investment plans to take advantage of market dips.
Yeah, that's an interesting idea.
But they also cautioned about the risk of holding onto cash and not reinvesting it when the right opportunity comes along.
Right. You don't want to be sitting on the sidelines too long.
There was also that part where the speaker talked about being a little bit in the red with their Walmart investment.
Yeah, but they didn't seem too worried about it.
Right, because they believe in Walmart as a company. It's a stable, reliable business. And this underscores the importance of really understanding the fundamentals of the companies you invest in.
Totally. You need to know the underlying business. Is it making money? Is it a leader in its market? What's its long-term potential? These are the questions you should be asking.
Especially when the market gets rocky, that knowledge can help you stay calm.
Yeah, it gives you a sense of perspective. And then they talked about the pattern day trader rule. This is something anyone interested in active trading needs to know about.
Okay, can you break it down for us?
Sure. So basically, if you have less than $25,000 in your brokerage account and you make 4 or more day trades, that's buying and selling the same stock within the same day within 5 business days.
Okay.
You can get flagged as a pattern day trader, and there might be limits on how much you can trade. It's a rule meant to protect less experienced traders from taking on too much risk too quickly.
So if you exceed that limit, you could face restrictions.
Exactly. You might not be able to make as many trades as you want.
And the speaker's advice for beginners who are curious about day trading. Start with a paper trading account. Essentially, practice with virtual money before risking real money.
It's great advice. Paper trading lets you test different strategies, see how news affects prices, and build confidence without the emotional stress of using real money.
It's like a simulator for trading.
Exactly. And their suggestion to start with less volatile stocks like Walmart for your first real money trades is also smart. You don't want to jump into the deep end right away.
Good advice. The videos also emphasize understanding a company's profitability, whether it's actually making money.
Yeah, and they cautioned against investing in companies that are consistently losing money, especially those that might need to issue more stock to raise funds.
Right, because that can dilute the value of existing shares.
Exactly. When a company issues more shares, it can drive the price down. And it's interesting that the speaker talked about using a custom GPT to research companies.
That's cool. What is that, like a personalized AI tool?
Yeah, basically. They use it to analyze financial data and news quickly. It's a reminder that there are lots of tools out there to help investors do their research.
Awesome. So shifting gears again, the videos highlighted recurring patterns in the market, like how stocks often jump up in the morning and then dip later.
Yeah, the ebb and flow of the market.
Right. And the speaker advises against chasing stocks that are already in a strong upward trend.
Don't get caught up in the hype.
Exactly. And then there's the concept of consolidation, where stock price stays within a certain range for a while.
Consolidation is interesting. It often suggests that buying and selling pressures are balanced.
Okay.
It can be a pause before the stock makes a big move, either up or down.
Like it's gathering energy?
Yeah, something like that. And the speaker talked about using different chart timeframes, 1 minute, 5 minutes, daily charts to analyze price patterns.
So you're looking for clues about where the stock might be headed.
Exactly.
Okay. One of the more intriguing concepts in the videos was buy the rumor, sell the news.
Ah, yes, the classic market psychology phenomenon.
What's the idea behind that?
Well, sometimes the anticipation of good news can drive a stock price up even before the news is announced.
So people are buying based on the rumor.
Right. But then, once the news is actually out, those who bought on the rumor might sell to take profits, causing the price to drop, even if the news is good.
Interesting. So it's about understanding how market sentiment can drive prices.
Exactly.
We also got insights into some typical intraday price patterns.
Yeah.
The speaker mentioned that the market often opens strong, then dips mid-morning, and maybe recovers later in the day.
Yeah, a common pattern.
And their advice was to be cautious about buying right at the open.
Right. That initial enthusiasm can fade as the day goes on. Waiting for a dip later in the morning can sometimes get you a better price.
So it's about being a little more strategic with your timing.
Exactly.
Throughout the videos, there was a strong emphasis on independent thinking and taking a long-term perspective. The speaker's story about their Palantir investment really illustrated that.
Yeah, that was a great story. They did their research on Palantir, liked what they saw, and invested even though some people were skeptical.
And it paid off big time.
Right. It shows the importance of forming your own informed opinions and not just following the crowd.
And they had another interesting strategy, buying more shares than planned to take profits along the way and reduce their average cost.
That's a more advanced technique, but it's a way to manage risk and lock in some gains while still holding onto the stock for potential future growth.
Makes sense. The speaker also mentions so many different stocks they've invested in: SoFi, Creation, Apple, DraftKings, tons more.
It was like a whirlwind tour of their portfolio.
What was the main takeaway from all those examples?
Well, I think it showed the variety of investment opportunities out there and also the reality that you can win and lose in the market. The speaker was pretty transparent about their results.
Right. They didn't shy away from showing both the good and the bad. And they called some of their investments lottery tickets because they were higher risk.
Yeah, That's important to remember. Not all investments are created equal. Some are inherently riskier than others.
Definitely. And then there was this story about their losing day trade in BuzzFeed, a cautionary tale.
Yeah. They admitted to chasing a quick profit and ignoring their own rules, and it backfired. It's a good reminder that even experienced investors can make mistakes when they let their emotions get the better of them.
It's a reminder to stay disciplined and stick to your plan.
Exactly.
Oh, and the speaker also talked about investing in things like rare earth materials and recycling companies.
Yeah, those are interesting plays on future trends.
Definitely forward-looking investments.
Right.
To stay up to date on market news, the speaker recommended resources like Yahoo Finance Live and Bloomberg Live on YouTube. Those are great free resources for anyone who wants to learn more.
Yeah, they're great sources of real-time information and expert commentary.
So it's interesting, the Risks X Rewards channel isn't just about finance. They also talk about things like relationships, careers, personal growth.
Right. They have a broader perspective on risk and reward, applying those concepts to different areas of life.
Like in that prequel video, they talked about the trucking industry and the value of experience.
Yeah, it's cool how they connect those dots. Risk and reward are everywhere, not just in the stock market.
And that leads to the final big takeaway: invest in yourself.
Yeah, continuous learning, building new skills, personal growth. The speaker has online courses and communities dedicated to these things.
Awesome. So as we wrap up our deep dive into these Risks X Rewards videos, what are the key things listeners should keep in mind if they're thinking about getting started with investing?
Well, first and foremost, patience is crucial. Don't expect to get rich quickly.
Right, it's a marathon, not a sprint.
Exactly. And be a lifelong learner. The market is constantly evolving, so you need to keep learning and adapting.
Stay curious.
Yeah, absolutely. It's also important to understand market sentiment, those recurring patterns that can influence prices.
Okay, so don't get caught up in the hype, do your research, and be patient.
Yeah, that's a good summary. And most importantly, take a long-term perspective. Investing is a journey, not a quick win.
It's about building wealth over time. And remember, what we've discussed are just the insights and opinions of one individual.
Yeah, just one perspective. Your own investment decisions should be based on your own research, your own goals, and your own risk tolerance. Always.
So here's something to ponder as we sign off. Think about how some of the psychological aspects of investing we talked about, like the buy the rumors, sell the news mentality, or the fear that can creep in when the market drops.
Yeah, that fear factor is real.
How might these tendencies influence your own decisions? Reflect on that. And consider your own risk tolerance and your learning style as you navigate the world of finance. And if there are specific topics you'd like us to explore in future deep dives, let us know. We're always happy to take a deeper look at things our listeners are interested in.
Absolutely. Keep those questions coming.
Until next time.
See you then.